morning, everybody. It's Friday, January 12th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments or would like to chime in on anything we're talking about here today, please feel free to drop us a line in the chat area, and we'll be sure to get to that during the show. Quickly, overnight markets here had March corn up a penny and a half, 5.90 or 59 and a quarter. Excuse me. March soybeans were up 8.5 at 12.45, and March Chicago wheat was up 6 at 6.09 and 3/4. No USDA sales announcements here this morning. It's report day. USDA report going to be out at 11 o'clock Central. We will have a special live show at 11:05, so about 5 minutes after the report comes out, and we'll dissect the numbers, have some initial thoughts and opinions, and go through what the market's early reaction is. Big topic here this morning. We've got a pretty massive storm going through the upper Midwest. We also have some pretty violent storms kind of going through kind of the southern parts of the United States. So lots of weather going on here this morning. I know the O'Hare was on a ground stop till just about 15 minutes or so ago. Over 700 flights rerouted or canceled out of O'Hare. So tough start to the weekend for those folks. Hope everybody is okay over there. But as we talk about weather, Ryland, let's kick it right into cattle. Blizzards going through Nebraska, parts of Kansas, and certainly heading this way. But what do we got in that sector?
Yeah, livestock markets in general are definitely suffering a little bit from the impacts of this, Dan. We've been seeing it definitely in the slaughter so far. And I think the expectation is that this colder temperature and the blizzard's definitely going to slow movement of livestock to plants. We've already seen that in areas in Texas and Kansas on the cattle side of the market, and also weights, from just the weight standpoint. We'd expect that this week and into next week that weights are going to be coming down for dressed steers and in the hogs. So the hog market has definitely been kind of the leader, I would say, on the board, just with what's been going on from getting the weather premium established. But also the cattle market's tried pretty much every morning to really break out because of this. So we've actually haven't really seen it bleed into the cash side of things, just as it feels like there's less of a buy going on, just because slaughters have been pretty light. We're at 120,000 head this week versus 126 last week. So it hasn't really been supportive to the cash side of things, but cutout has exploded. We got box beef prices have been surging on top of this just because production's been so weak. So I think overall it's been a little bit on the friendly side towards the fundamental side of the market, but we're still waiting to see if that's going to bleed into cash into next week. So far, cash cattle trade has really been limited, about 272 to 275 in the north. This is a little bit lower than expected. I think everybody was coming into this week thinking that beef cattle prices were going to start to surge following the board, but it's just you're not getting much movement in either place right now. So it still seems like there's some reluctance from the bulls to really get involved before the 31st report. So I would say that that's really going to be leading the trajectory once we get into February. But I would say that just with production being down and weights being down, we're in that kind of mix right now. You get some bullish headlines, you get some bearish headlines, but overall this storm is definitely creating a problem for just about everybody across the Midwest now. So I would expect to see it as cash trade to really pick up.
Yeah, and we were talking earlier this week too. I know we had a roll going on in Feb out forward. Those spreads were going pretty wild. I mean, what about the hogs, in that sector?
Yeah, the hogs, cash has been pretty stagnant overall, but this big surge in Feb has been gaining on just about every month right now. And a lot of that may just be like just getting ahead of the holiday demand. Seasonally, it usually kind of goes this way. Feb will start to take the reins at some point. It's been gaining a lot on the deferred. So perhaps there's a little bit more confidence that the meat's going to stay pretty good right now. Bellies have finally kind of stabilized after a really sharp jump this week. So I think that's why the board was pretty good. Also, the weather premium, we would expect that hog weights start to decline this week, and we'll know that next week as well. So I'd say that just from a production standpoint, I'd say that's more on the friendly side of the market in the Febs are definitely going to lead that train.
Very good. Thanks, buddy. Appreciate the info. Ben, let's transition a little bit over to the report here later this morning.
Yeah, just a couple comments. This is a huge data dump, and it's not the place where you typically want to be forced into a decision one way or the other. We've seen in the past that reports can surprise. I think the market is fairly comfortable going into it. We haven't seen a huge expansion in volatility. Corn options in particular are very cheap, relatively speaking, for the amount of data that we're going to get. Corn and soybeans both have, dropped into new recent lows early this week and been kind of a consolidation phase. Those chart patterns generally suggest continuation, but humility, right? When you go into a report, a lot of humility. I saw a couple of trades come across the wire that I look at the risk that people are taking to put them on, and it's just a better flavor to go into a report like this with humility, and be prepared to execute something to your liking after it's out. So expect it to get a little dicey this morning, but after the report, we'll go back to trading what they tell us. And I think that we've traded up to this point a lot of things that we've already known. So we'll see how it shakes out today. I think a lot of eyes will be on obviously any change in yield. More importantly, when you get to stocks, and eyes on what the U.S. has to say about South America.
Yeah, I would add to that too, Ben. Just taking like a macro view of where we were at this time going into the report in 2023. So price of corn was $2 higher. We were $6.54 coming out of the first week there of January. Price of beans were $15. Corn today being $2 lower than that, that's reflective of the 1.2 billion bushels of additional supply that we're expecting to see on this quarterly stocks report from what we were looking at January of 2023. So, whether that's, 1.3 billion bushels more or 1.1 billion bushels more, we're going to probably get somewhere in that 100 to 200 million bushel swing of estimates often in these reports, and that will dictate, your initial knee-jerk reaction. But it certainly justifies, obviously, why we are so much lower than we were last year. When you flip over to the beans, it is interesting to consider. I know, corn is certainly helping to make that relative price lower, but coming from a $15 bean price down to a lower 12s, we're actually expecting to see a 2.975 billion bushel stock number versus 3.021 last year. Or I'm sorry, 3.021 as of December 1st, 2022. That'd be last year's number. So bean stocks are still quite tight for such a big price deviation. Not suggesting that means we need to go right back up to $15 by any means. But it's just the corn number is a lot more justified on the break, I would say, for us, for just a pure tightness standpoint.
Yeah, I just to add to that, I think that outside of a huge surprise one way or the other in corn, I think corn's going to have to get any strength will have to be inspired by strength in beans or wheat if that were to materialize, just to force some covering. But the market seems really content. I think it's looking at the amount of data that's coming out, the things that are there, their options are very, very cheap, and the trade seems to be content with it. I saw a trade that came across the line yesterday that someone sold 4,470 calls for a penny. And I look at a trade like that going to report and think, boy, that's a really hard way to try to make a living. So.
I can see Justin's got something he's thinking about over there.
No, I agree. I think, it's just to some of these points, like South America is just such a big portion of how we trade these days. So it's tough because, last year you had really bad Argentine problems. This year your Argentina's going to be up, Brazil's up again, so we're just always fighting that headwind, which is so tough when you look at domestic numbers, like like we talked about yesterday, our export pace of beans has really slowed down. So anytime South America has enough production, it's just so hard for us to pick up demand, so I just think that's such a heavy weight on us. And I personally think that any strength in corn is going to be new crop. What, like to Dustin's point, whether it's $1.2 billion bigger or $1.7 billion bigger than a year ago, it's enough right now, and we know that the farmer in general is way undersold, right? So they're kind of a bad market structure for corn. So I think the thing I would take away from some of these comments that Dustin was saying, like if there is a surprise, you might have people leaning too far one way, adding to the weather, issues with livestock that Ryland was talking about. We've seen basis levels jump 25, 30, even 40 cents in some areas of Iowa. It's freezing. There's a blizzard. It's supposed to be below zero. I mean, I was looking at the weather. I think here in Chicago is not supposed to get back above freezing until February 10th. So you could see some really good basis pushes if you tack on a little bit of a surprise in flat price. You might see some $5 cash levels get hit here sooner than later. It's not that far away with these basis numbers. Or you might see some kind of a support just trying to get some bushels to move in these kind of conditions. So I think you got to kind of make, lemonade with lemons, not try to look for last year's markets here. I don't think that's going to happen. But there could be some other opportunities that hopefully show up here in the next 30 days.
That's good points. As we go into the report too, guys, any fellas, you get the moving averages up, just some kind of lob some targets. If you're, looking to get some catch up stuff done and you get some kind of crazy spikes. I mean, where are some of those averages at right now?
I think the 50's at 480, 100, 490, and then if you look at the 200 days, this is all March corn. It's like a 516. So I think surprise on the USDA report. If yields are unchanged or even lower, I mean that would be a really big curveball to have those targets in place for sure.
Yeah, D's corn's probably in that 502 to 515 range. So they seem like really far away, but they're 12 to 25 cents away.
Right.
Dustin brought up a couple mornings ago, 10 years ago on this report, we had a big bear market. We were limit up. And, so, I mean, it might not stay though, right? So you could have a 25, 30 cent spike, hit all those numbers, and somebody's going to be there to sell it. It's going to be hard to wait for those numbers to hit and then decide sometimes in these markets. So
there's a lot of guys that want to get that sold, right?
Yeah. Yeah. I think there's a lot of $5 corn for sale out there, right or wrong.
Right.
Yeah. I will also say about South America weather. What I read this morning and looked at the maps, the central Brazil is hotter and drier the next few weeks. So we should probably, keep an eye on that as well on the extended forecast. So.
Yeah, if there's a big overhang of corn that wants to be sold, that's just definitely something to keep in mind. If you see a bullish response for corn, think about how short-lived that could be, right? So making a kind of a quicker decision on catching up on sales in old crop if that's your goal. But also, we still are looking at we think there's a fairly high recency bias on spreads and what they're capable of doing. And I know we've kind of talked about this topic a lot, but you're talking, July near 10 cents, or July D's corn near 10, 11 cents last couple of days. That's still looking at huge number of safrinha corn acres coming into play by that point in time, and 1.2 billion bushels expected to be larger carry in from where we were last year. We're not likely to chew through that supply. We're likely to have a sizable carry in, and we're still in a high interest rate environment, right? And we have a lag of corn that wants to be sold. So when that corn ultimately does get sold, which it's going to have to, because the calendar is going to roll over and cash needs to be raised, that's where we still are looking at those spreads and saying, hey, there's something that still looks, kind of funny about how narrow the spreads are on a percentage of full carry. And we keep hearing, well, it's different, it depends what the market needs. But then we go back to the September and the December contract. The calendar ran out in those years, and we went to a very large carry, Sep Dece and Dece March, going into first notice day. So, that's just still something that we're really hyper focused on as we get into the last half of Feb, looking at that March contract and how that relates to May and July, because that could get interesting if there's a bunch of basis only contracts that need to be priced at that time frame.
Yeah, and Dustin, just added that point too, like in conjunction, like especially over in the West or these areas that are having these big basis pushes right now. And I know, maybe you can't actually move it, but if you can get some corn sold and actually get it moved, if you have a big basis spike and these spreads have narrowed, and even if you're just a flat price bull, it's still probably worth selling some, freeing up cash and re-owning like July calls and looking for some kind of a summer play or an acreage surprise, something that buys you some time at these cheaper option levels. Probably just a good play where you can still kind of be in the market, and you're just playing where these spreads and where these basis levels are, and not have necessarily a huge flat price objective, but just making sure you're using your storage and taking advantage of paying off some debt and not paying interest. Those kinds of smart money decisions. Yeah,
good point.
Oh, very good. Well, we just came into the open here, fellas. We got March corn unchanged to about 457 3/4. March soybeans up 1.5 pennies, 12.38. March Chicago wheat's up 6 3/4 at 6.10. Also, one thing to highlight too, Jan futures, Jan soybean futures are going to go off here today, so it's last trading day for that contract. Also, wanted to point out a couple administrative things. Very excited. January 29th. It's a Monday, 2:00 Central Standard Time. We are going to have some exclusive content, some premium content. Mr. John Wenzel from StoneX, one of their directors of energy and fuel markets, is going to visit with the War Room on some trends and just some things that he sees for fuel and energy markets as we go into latter part of the winter and into the spring. So we're excited about starting that off and getting some premium content out to folks. So more details will follow here in the next couple of weeks as we approach that date. But mark your calendars. We're going to be going live there. Always, we're streaming every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Standard Time. Today, we will be back with everybody at 11:05 post USDA report. So we will talk to everybody here in a little bit, and stay safe out there if you're getting some of these storms. We'll talk to you here in a little bit. Have a good one.
Thanks, Dan.